Hey everybody, welcome back. Well, all that drama and we're basically in the same range. We're going to drill into this. Have to go through Bitcoin, why MDGL is up about 50 points, why we're seeing Adobe crash after hours. So we have a lot to get through, and of course we need to discuss quad witching and what it means for you tomorrow, especially for option traders. But what we want to do is just focus on some key levels right here. First and foremost, one of the things that we like to do is we like to mark off where we see when the PPI comes out. Now, what this allows us to do is establish a range. This range right here was established with a 1 minute chart. And so what we like to do is just see where the algorithm and high frequency traders are at the time. And what this tells you is exactly where they were, where they said that they would basically sell as much as they could, buy as much as they could. And then when that breaks, that gives you a pretty clear direction. And you can see this clear as day. As soon as you hit 930, you open, you try to get through it, you can't, you retest, and then it was just straight down from there. So for those that like playing options, zero-dated options, if you're not marking off this 830 level, you're missing an opportunity, and I'd strongly suggest that you do it. We've gone over this ad nauseum in times in the past, and we did it for CPI too, but what I'm finding is sometimes it's really good to go over these levels over and over again. And you can see the same exact thing here if we go and just mark off the 830 level, and I'll just drill into that. And you can see this for the CPI as well. It's always fascinating to people when they actually see, I thought that was a little high, when they actually see how this works. But there you are at 830 on CPI, and you can watch the test, the retest at 930, and then you can just see right there, you tried, you failed, you came all the way gap down, couldn't get through it. It becomes what? Right? When you think it's support, then it becomes resistance. Test, it becomes what? Support, right? So just knowing where those levels were made life very, very easy. And then, of course, we all know that this is when the bond auction happened, which just happened to happen after CPI. So you would know to be watching these levels right after the bond auction. If you are trading these indexes and you are not watching the bond auction and you are not marking these levels off, you need to use what you have to your advantage. And what that is understanding where the high frequency traders and the algos are going to step in and then using their own weight against them, right? Remember, they're the sharks, we're the remora. So you have these levels marked off and you're going into quad witching. Most people know what quad witching is, but we'll go over that as well. And again, you can just see here is CPI, PPI, and then you watch how we just act at those levels all the time. It's pretty crazy how it works, but there it is nonetheless. RTY could not hold anything. I mean, literally nothing. And you could see this from CPI, tries, rallies, fails, and then it was just straight down. You can see the top of that right from that Tuesday level, and you could never could clear it. Never had a shot at it. Never really came even close to it. So sadly, an RTY continues to take it on the chin. Now we're not even talking about how many rate cuts. We're talking about if there will be rate cuts, which is a very different story, and the market's responding in kind. You're watching the 10-year move up. You're now at a 429. And today was the first day that I really saw like real selling in the bond market, like true, hey, we're going to get out of corporate yield. And I'm not really sure how that's going to play out. I mean, I've seen it in the past a little, like here, but this just felt heavier today. I guess the word I'm going to use is it actually felt more real. And even here, when I saw this break the 55, for me, when we're breaking the 22, the 12, and the 55, I use a 12, a 22, which is purple, and a 55 SMA. Open, high, low, close. You should use what you're comfortable with. So you start to see how that's acting. And then we just come here and we just drop in that 200. And now I'm below everything. So as somebody that is long this and been in this since November, I have some thinking to do. So there he goes again, thinking. But I have to sit there and take a look at how this is going to play out. This is not what I anticipated. But then again, you know, man plans, God laughs. So something for us to watch here and then see how it goes. But it's clearly not what I was anticipating. For those that wanted just the swing trade, it was up here when it broke the 12 and then the 22 as well. But people that are in the community already know that. If you're trying to get into the community and there is a wait list, you will be invited in. It just takes time since I'm the only one that does it. People come in and then we do the onboarding call. You actually speak. It's very different than most communities from what I gather with other people that are in there. It's an actual community, so it does take some time to get in. So just bear with me as I walk through that. But do look for your emails because they do expire. If you're not on and you want to get on, just get on the list. Link in description, and sometimes they actually point or pin the comment. Anyway, so you can see what we're looking at now, and we see what we're going on. That's a change in trend, and that does not make me happy. I don't feel warm and fuzzy there. So then we can just kind of see what's going on with the VIX. Are we really seeing any love out of the VIX? Like we're seeing any real selling? No. But we're certainly seeing some selling out there. Now, if we go to one of these charts before we get into quad witching, I'll go to all 39. So this is just all 39 charts outstanding, like the biggest sectors. And what we're going to do is just mark this from the 930 level, and you'll see what I'm talking about here when I drop it. So if I drop this from here and we put this demarcation line in, look how many sectors are actually net down today. And then you look up here, and you can just see that you have utilities, financials, and yet some of them were actually considered up. We'll have to see how this goes tomorrow. I mean, candidly, I'm going to zoom out on this a little bit more so you can just kind of see it on the 5-minute as well. That'll be a little clearer. And you start looking at some of these, and you're just kind of like, well, it really was not a great day by any stretch, right? And it shouldn't have been. PPI came in hot. I'm not going to go through all the numbers again. For time's sake, we need to focus on what's going to happen tomorrow. But when we look at Bitcoin and the market cap of Bitcoin, I'll do that later. I want to show you this because I thought this was really interesting. We were discussing this today in the community, and I just thought this was really neat and definitely warrants our attention. Today was the first time that we actually saw some real selling hit the tape on this, and you could see it right in here, right? So this really wasn't anything like dark pool or anything. They just really hit the bid there. And now if you take a look at it, watch, and you'll see it right in here. And I thought this was worth our time before we get into some of the other stuff. But look at this. So there's clear seller up there. And when it tried to get up there again, that seller was still there, and you can actually see the spike here. Now, of course, you know, I mean, like every stock, it just goes up 100 points before the close, because why not? But it just makes you think that, you know, this is coming closer to an end. Obviously, it's ridiculous where this thing is priced at that point by any stretch of the imagination. And then you start looking at the amount of selling that is coming in right here. So to me, it's starting to feel that way. But, you know, we'll see what tomorrow breaks with quad witching, and we will go from there. Speaking of quad witching, we might as well get into it now before we get into some of these other names so that we're all on the same page. So quad witching tomorrow is when 4 asset classes all expire. Out of those 4 asset classes, let's talk. Let me give you a definition. So here we are, and all I did was just copy that straight out of Investopedia, and you can go there for a more clearer observation if you don't like what I'm about to say, or you want more definition on it. They have the very basic rudimentary stuff, but it is what it is. So quadruple witching refers to the simultaneous expiration of stock index futures, and this is where it gets interesting. Stock index futures, stock index options, single stock futures derivatives. Okay, 1, 2, 3, 4. Why should you care about this? You should care about this because what happens when all 4 of these expire? You have your monthlies expire. Okay, and that's going to have your index futures, your stock options, and your stock index options. And now we're also going to have single stock future derivative contracts. And all of these make quad witching. Now, you're used to triple witching. Quad witching is a little different. And the best way that I can do it is to give you an example of it so that you can follow along. You usually start 9:30 and the day will get volatile. Now, I don't know if you're going to go up or down, but this is how the day usually goes. It starts off and then it gets tighter and tighter, and breakouts and breakdowns don't wind up doing what you think they're going to do, right? They just don't. And why is that? Well, what starts happening, let's get this watermark off for a second. What starts happening is arbitrage between not 3 asset classes, but now 4. So when you start thinking that you're going to get breakouts, you don't get those breakouts. What you get is you get tighter and tighter. Why are you getting that? Because of the arbitrage opportunities between those 4 asset classes. So this just keeps getting tighter and tighter until it starts coiling. And then what will happen after this coils for a little bit longer, later in the afternoon, when the training wheels are off, is the best way that I can explain it, you'll start doing this again, and you'll pick up different directions, and you'll start getting way more volatile. Why? Because the money that came off, if they want to put it back to work, now they're going to put it back to work in whatever direction they so choose. So you start out pretty wide, it gets super tight in here, and then it gets wider as the day goes on. Does not mean, when I'm doing this, I'm not talking direction, I'm talking about volatility. So when I'm doing this drawing, let's clean it off, and I'm going to just clean this up so that you get it. I'm not talking about direction. I'm talking about volatility. We're just going to leave that there, and we'll leave that there. Hopefully this is the right one. There we go. I don't have time to edit. So we're going to just show you this again, and you can just kind of see how this fits in there, and I appreciate that you guys don't care if I edit or not. That's volatility that I'm showing. And then what you start doing, you start getting wider and wider. That's what happens to the volatility. It could be one direction, doesn't matter, but that's what starts to happen. So now you have a clue on what to expect tomorrow. It's usually pretty vicious for people that aren't used to it, and they usually have a very hard time with it, and they don't understand why their trades aren't working the same way as they did all week. And this week, if you're struggling this week, just to FYI, this is an extremely difficult week. I'm not saying people out there aren't going to catch things, but when you're starting to see these kinds of moves and we're starting to see this kind of change in trend, it's certainly something that we need to be aware of. And frankly, I don't even think things are moving the way that we would think that they would move. And I'll give you an example of that. For example, Adobe. Now, Adobe's down. We're sitting at 514 after hours, but this was a decent quarter. And so they didn't guide as high as expected. Maybe they don't have the right, quote, AI plan. And so what we're seeing is just outright selling. And let's take a look at it. And you're just flatlining right here. Now, whether this stays down tomorrow or not, I'm not sure. But what you could do with these kinds of names is you could take a look at these and start seeing where the max pain is. Now, max pain is where the most amount of pain will be created at a strike tomorrow. These names usually do go there. Now, I'm not suggesting that this one's going to go to where it is, but we're going to take a look at it in a second, and I want to show you how to use this because this is a great tool to use for quad witching. Now, in front of us is Adobe, and this is called max pain, and what they do is they actually calculate out the max pain for you, and you can click on these little things. You can get the Greeks, history, IV, things like that. It is very helpful for our purposes. All we're really going to use this for is to just talk about max pain and where that max pain level is. And usually what you're expecting is for these names to get to that level. Now, it spells it all out right here, 314 at the time of recording this, where the stock currently is trading. It's actually a little higher right now, 514. Max pain's here. The highest open interest is 600. The call amount's 560. Where the puts are, put amount is the put call ratio. So it gives you a ton of data at your fingertips. But if you go here and take a look at the open interest, you just see the chart maturity for tomorrow, 541, what time it was created. But you can see where all the puts are, right? So obviously these 560 puts are going to get paid tomorrow unless they get themselves up there at some point. Obviously 500 is going to have some puts out there too, so they're not going to want those. And they're certainly not going to want to pay on those 580s, nor does it look like they're going to have to. But, you watch those 540s and maybe you don't get to that 580, but when you look at charts like this open interest chart maturity, you could see how it might get itself up to 540 at some point in the day because they just very simply want to clean those people out. So that is possible that you could see a movement like that. And this shows you just volume, like where was the majority of volume. And it shows you right at the 500 put level and at the 600 level on calls. So they look like they're just going to get paid there. So we don't really see that as something that's going to affect us, right? So let's say that these were all at the end of the day, they were all at like 550 or something like that. So you can see these 550s right here. Well, they're not going to worry too much about that if they're getting paid here and they're getting paid here, right? So that might not be as big of an issue, but what they do a great job of is you can literally type in any symbol in here. And I would consider utilizing this because it does a lot of the work for you. In other words, here's the video that we just popped in. We just click off that ad for a second. And what this is going to do for us is just give us even more data. Now, what's that data going to do? Well, you see max pain 770. Is that realistic? Probably not. But then you look at like everybody's out there buying the 1,000 calls. How'd that go today? Probably not really well, right? And then you come here and you see the 900 calls outstanding. They probably are not going to want to pay on that right away, right? So what do you think they're going to do? They're probably going to try to get it not to go over 900 for as long as possible and bleed out the 850 puts, bleed out the 870 puts, and kind of keep you landlocked in there for a period of time. So even though you look at max pain and you have that and go, that's ridiculous, and remember, that's a blend, but you can use these data points and go, okay, well, that's definitely going to be a wall, right? That's going to be a problem for it to get over 900. Okay, that's definitely going to be a wall. It's definitely something they're not going to want to pay on. So you could see how 870 is something that they're going to not want to break. And if they do break that, then you could say, okay, well, that 850, et cetera, you get it? It doesn't mean that it's going to happen. Let's be really clear about that. But when you see stuff like the majority of volume today was 900, well, you know that 900 and 880 are going to be levels tomorrow. You know that off the top, right? Then you know that the 870s are going to be levels and obviously the 850s. But this gives you a real quick snapshot of, hey, where are all the players at? And then what do we do about that? And I think that is really very important for us going forward to just do this. And you might want to watch this during the day because it updates. So you can kind of take a look at it and see how people are positioning themselves. Specifically, if you overlay this with what I just talked about when we start talking about that volatility, and you want to see how the stock's affecting that volatility. I have no affiliation with these guys. It's a free service. There are other services that do this a little bit more in depth that cost money. But I always try to bring out the freer services so that you can just utilize those instead. Now, we're going to want to watch Adobe, but this MDGL after hours, let's go to a cleaner chart. So they had a drug come out, and the drug had excellent data. And then, of course, with the excellent data, what's the stock go do? It goes down. For what reason? Not a clue, but welcome to the wonderful world of trading. People didn't like the drug or didn't like something about it. But after hours, the FDA seems to have fast-tracked this. So that's which is kind of interesting that they did something along those lines. But by doing that, I think that it made some other names move, and we'll get to that in a moment. But let's just focus on this for a second. Now, they came out with the data, and then the stock was halted. When it was halted, the shares are trading higher after the company announced FDA approval. This is the name of the drug. I'm not going to butcher it. For the treatment of patients with this disease, I'm not going to butcher it, moderate to advanced liver fibrosis. Now, this had an interesting effect on a couple other names. One of the effects was on this VKTX. And the reasoning behind it is if they fast track that or that moved faster, the possibility for this to move faster. I can't really extrapolate on that. That's certainly not my wheelhouse. Just candidly, this was a really simple trade when we saw it move to just get involved. I mean, that's all we did there was just look for volume, found volume, spike, and then just got involved in the trade. And then it did obviously exceptional from there when you saw the spike. So you can always do those kinds of things, and they always, have an outcome that's pretty easy to see. I mean, there's your stop. This is you getting in. By the time you get in, sometimes they have the pullback, and then they run, and then you're looking at your life decisions, and then later you're just fine. But I also be watching this LABU tomorrow, because if this happens and they start fast tracking it, and LABU has really been very tough trader lately, but you can see this very clearly how you're trading up after hours, and this moved because people couldn't get access to the other names. So all of a sudden, this thing just absolutely ripped. So you're going to want to watch LABU tomorrow. Other names that are worth watching besides this MSTR, I'm sure it'll be up 100 or down 100 tomorrow. But coin actually looks tired here. Now you're trading up $4 because why not? But you're starting to get tired up here with the wicks. These are changes in trend when you start seeing this kind of volatility. Doesn't mean that you can't rally, but it does mean that we're starting to get exhausted. And then you can obviously just see the CLSK as it just begins its death march down, and Mara just begins to just implode. And it's funny that you're really down for the month of March. You're basically cut in half already since earnings. All you've done is just absolutely implode since then. So something to consider there as well. But watch these names tomorrow, see how they go. For me, what the big telltale sign on the market feeling heavy was everybody had to be in hood after hours. Nobody wanted to own it during the day. When you start to see that, everybody had to be in there. Nobody wanted to own it during the day. Oracle had to be in there. And now you're just getting these closes over and over. You can't rally anymore. And we're seeing these rejections. And I just want to point this out before we go into tomorrow. I mean, if someone was going to tell me my best short of the week was going to be Dell, I wouldn't believe them. But it was just, quite frankly, the easiest short. It's just been methodical. It's just the selling. Take a look at this. And you would not think this. I would have thought it'd be Boeing. But if you take a look at this, that's all it's been doing. Just straight down, just collapsing and can't get back over levels. Now, another name that I get asked a lot about, so we're going to cover it here, and I do want to talk about this, is just Tesla. This looks really bad, and that's not the technical term, but it's just in free fall. I mean, there's really no other way to say it, and I don't really know where you're looking at stopping. Maybe the 154 level. I get asked a lot about where do I think this thing can go, usually in the pre-market live streams. But if you start going through here, I mean, there's nothing here. Where are you going to go? The 160 is where you think, right? But you're hanging on here by a thread. You broke it today, tried to bounce. But if you take a look out to April, I mean, that's how far back you have to go. This is it. You're at that 153 level. So we'll see if that helps tomorrow. As always, thank you for your comments and thank you for sharing this. The more that we get the message out, the better it is for everybody. And it certainly helps with getting new people into the pre-market live stream, which is exactly what I'm trying to do. So I appreciate it. That is it.